Hello and welcome to this episode of Equity Sahi Hai. Joining me today is well-known financial advisor Sanjeev Singh. Great to be here in Bengaluru with you, Sanjeev, and thank you for coming on the show.
Yeah, thank you. Thank you for having me.
My first question for you is that, a lot of historical performance is quoted, is given about how equity has done in India. And while we keep saying that just because something happened in the past may not be true in the future, but if you were to look at the fact that India being a developing country and we still have a long way to go of growth before we become a developed country, will equity in India continue to make money for investors?
I believe certainly we'll make money in equity. The reason is we are striving towards $5 trillion economy. And with that, we'll see a lot of companies which are in an unlisted space will get listed, and the small will become mid will become large. And in this process, a lot of capital infusion will happen. If you also look at there is a huge interest of FIAs and DIAs in India, and with India also improving the tax structure, I think certainly equity is a place to make money in India.
So Sanjeev, when we talk of equity returns, what according to you is a reasonable return that an investor can expect over the next, say, 20 years? If I invest today and I look at a 20, 30-year kind, I know you can't give a specific number because it will depend on a lot of things. But does equity have the power to give double-digit returns in the next 15, 20 years?
Yeah, since we are discussing about India going to the next, league of big nations, we also have to look into the inflation part of it. Last 5-6 years, if you look at the inflation has been hovering around 4.5%. And I think anything 5-6% more than inflation is a very good return. So 10% is certainly is what we can look at from Indian perspective. And we are certainly going towards it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.